As Hong Kong faces increasing pressure both internally and externally to open borders, Finance Chief Paul Chan said an improved vaccination rate is key to achieving that. He also expressed hopes that the upcoming batch of consumption vouchers will help reboot the economy. Chloe Feng reports.
Writing on his weekly blog, Financial Secretary Paul Chan reiterated that effectively controlling the pandemic is fundamental to stabilizing the economy. Border restrictions can only be loosened if the city's vaccination rate improves. Around 74% of the city's population is triple jabbed, while the rate of those aged 80 years old or above stands at 51%. That was a conclusion he made as he pointed out signs of woe in the city's economy. Chen said prices for local residential properties have dropped by 5% from last September's peak. Its trade volume also dropped by nearly 40% in the first 8 months of the year. That's coupled with a weakening stock market and dampened consumer spending locally, which has led to businesses placing little hope on Mid-Autumn Festival sales as pressures mount. But, he said, the upcoming batch of consumption vouchers will inject over $15 billion into the market, giving the economy another much-needed shot in the arm. Those will be handed out on October the 1st. In terms of external factors, Chen also made a warning about the U.S. Federal Reserve, which is expected to issue another aggressive 75 basis point interest rate hike by the end of the month. Local banks may be pushed to adjust their prime lending rates, which could add to the burdens of home buyers and small and medium-sized enterprises. On another note, Chen said applications for the silver bonds, designed for senior residents, have reached a record high with 290,000 bids. The inflation-protected bond's $45 billion offering size this year is also 50% larger than last year's. Chan revealed about 65% of the applicants are aged between 60 to 69 years old, while the other 35% are aged over. Chloe Feng, HKIBC.